Hello and welcome again to Stocks Advisor. Today we will talk about Vaxart Incorporated, a ticker name VXRT, traded at Nasdaq. So it's a biotechnological company with a sub-billion market capitalization. Why do I mention this? Because usually these companies are known for huge volatilities. You can see here the price was really changing, especially if you compare mid-November and beginning of February price action. It's actually insane. But yes, these are the companies. That's how they trade. And what is very important and interesting here to note, there is a confidence interval where the price goes and exits for the last half year. At least this is between 9.51 and actually 5. So why is it important? Because just statistically speaking, if you are buying at the lower part of these levels, you can then reach the higher parts of these levels with a lot of confidence. Here, this was happening all the time for the last half a year. So this is a very important level to remember. We'll keep it in mind. And now let's talk about what is happening quickly here. So what would be, as we always discuss at our channel, the two most seen technical patterns, and the third is risk mitigation that we will take at the end, to talk about at the end of the video. So what could be the patterns? The first pattern immediately that we can see here is if it's recovery, it's a pattern where we are going to rebound from these levels. So if this is indeed the new trend confirmed, if this is going to happen, especially after today's quite nice candle of 5.7%, we could rebound, but still some small descent could be happening because it's a big white candle, could be two small declines and then going higher, similar to what we saw by mid of April. So if this pattern is going to repeat, we just right in time to buy at these levels. We will talk now how to do it. So this would be the first level, and then of course we could go to the top of this confidence channel that I was levels that I was talking at the beginning of video. So 952, even higher we can go. This will allow us to make 15 to 20% even more profit here. So we can already put our profit note. It's a quite nice, in that sense, let's say ticker, because really can give you a nice profitability. But as these big profit giving companies also requires from you a lot of patience and understanding and believing in what you do. So this is the first channel, the first pattern, sorry. The second technical pattern that might be taking place here, if this one is neglected, we could actually go lower, and this would mean that instead of making the positive triangle here, that was the first level, the first pattern, we will actually form a double descent channel. So the first channel was here, then some volatility, and then we might be forming let's say the next channel here. If this is going to happen, it could be quite hard, because quite hard decline. It could be even two channels descent, meaning that we can also open a faster going channel here. And if this is happening, the price decline could go even nastier. So we just need to be prepared, and we will be. So let's now talk how to buy. So we have two levels. First is immediate rebounds, breakout positively. Second one is slow descending. So if immediate rebounds, how we play? It's already open to buy, meaning that we can just buy within these limits. So actually within the body of today's candle being between 660 and 710. So let's write here our first call out, 660 and 710. Quite nice position, might be slightly descending. Most probably the major action will start taking place next week. So we still have time to buy here calmly through those levels. Now, if this is going to rebound, as I said, 10 to 15%, 15 to 20% profit you can take. If you are more midterm trader, you can wait even till 952 higher. But if you just want to take your profit quickly, this is the profit taking, let's say, guide for you. And then if the price declines, of course, the descending continues, we can see it could go to the level of 5, a little bit lower, so to the bottom of this channel. Therefore, you don't want to really wait to very low, but still you want to be quite safe. Therefore, this would be the second level to buy, and this will be between 482 and 531. So this is the second technical level, meaning it's for the second technical pattern, the most probable one, and this will be between 482 and 531. So we will talk later how to buy here, how we do buy and sell, but this would be non-linear averaging down through those levels. And of course, the third one, we always keep it for so-called negative catalyst risk mitigation. What does it mean? It means that it could be in the form of any negative news that could really send price down, like here you saw in November, or it could be in the form of sector situation or global market situation. Anyway, we just need to keep some funds to average down non-linearly if price goes there. And here it will be the most obvious level between, let's say, 338 and 393. Again, this is not the level that we predict. This is very important. That's why we don't say these are 3 technical levels. We always say it 2 technical levels, and the third one is negative catalyst, because 2 technical levels, those are that you can predict and wait for according to, with some, let's say, chance according to technical analysis. The third one is just risk mitigation. So we are not waiting for it. We are not expecting it at all, but we just keep some funds to buy there if things go nasty, because we do not talk about stop loss strategies. We talk about buying through the principal levels and exiting with a profit, or in the worst case scenario, just with a draw. So this is the strategy. And the difference to a stop loss is that when you do stop loss trading, you pay with your money for time. So you don't want to wait. You used all your money, you just sell it, you accept the loss. With this way of trading, you say, I'm okay to wait a little bit longer. I don't bet with my entire money. I buy through slowly. And this way, you actually mitigate your risks at every level. And the last one, it's a really principal one. So at the end of the game, you should be profitable, which still might take you some time. So you pay with time for money when, if you do, let's say, stop loss, you pay with money for your time. So these are 2 different approaches. This one is the one we are discussing now. It's, let's say, more appropriate for those who trade with a lot of money for the principal levels, looking at daily candles, or for those who do it as a secondary source of income. And because usually these are the people who watch videos, that's why we propose this way of trading. And the style of trading with stop loss is usually suitable for those who do intraday trading on 15 1-minute candles, really having like 8 screens around them, etc., etc. So those who do it as a professional's daily basis, let's say from 7 to 5, actually more speaking more precise, from 9:30 to 4. So these are different styles. Since you are more, let's say, in the first category, I think this way of trading, this strategy of trading is the most appropriate for you. So with this being said, let's write the third level, the risk mitigation. It's 348, as I said, and 393. So it's not the level we wait for, it's just the level we keep some funds to buy through. And speaking of how to trade, this is, let's say, kind of classical situation, so no extra risks are seen here. Very similar to Fubo stock that we also analyzed, but with less risk seen. Therefore, it's a 5-portion play. So what does it mean? Because we said we buy non-linear through the levels. It means that the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion through the first level, meaning that you don't buy it immediately at, let's say, 710, but you buy it slowly through from 710 to 660. Then if price goes to the second technical level, you buy with another 2 portions through the second level, and you just keep remaining 2 portions just in case if there is any super bad news and we go to the third level, people will be exiting probably in masses and you will be just entering. So with this way of trading, actually you pay with time. As I said, you wait, but the worst situation gets, actually it's better for you because you will be really able to buy more stocks at a lower price with the principal level. So it's not just you say, I wait for bad news. No, you know if something happens, I'm secured with the principal levels there. So if you like this way of trading with risk mitigations, don't forget to subscribe to our channel. Tell your friends about this as well. Press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. With this being said, this is all for Vaxart. Good luck with this one and see you at another episode of Stocks Advisor channel.